Hello, good morning, everyone. So let's have our daily briefing for today. So let's have a quick market recap on yesterday's data. Okay, so first things we have the trade balance for Germany for the month of October. So the previous data was 16 billion euros, and the market forecast 18.4 billion. And at least time yesterday, it's 3 p.m. on the European session. And the actual data, it's 12.8 billion euros. So did not beat the market forecast, and it's lower compared with the previous data. And also we have the weekly initial jobless claims for US. So the previous data was 227K, and the market forecast at 225K. So the release time last night, it's 9:30 p.m. And the actual data, it was 184K. So it means that the initial jobless claims was lower, or for those American people who filed for unemployment benefits was way lower. So it means that the data for the US is good last night, and it beats the market forecast in the previous data as well. But to be specific, since we have data for Germany, and also we have US, but it did not create any market volatility, to be specific, on the euro against the US dollar. And for today's economic data during the European session, so we have to focus on a lot of things. So we have GDP data for UK. So we have monthly basis for the month of October. So the previous data was 0.6%, and the market consensus at 0.4%. So if the actual data was lower, based on the market consensus, then we can see a decline for the pound against the dollar. But if the consensus or the actual data is higher than the market consensus, then it's a good sign for the pound against the dollar. And you also have to pay attention for the speech for Christine Lagarde later at 5:05 p.m. and the rest. But in my opinion, I will not really pay attention with this data for the European session, but I will be more cautious on the US session since we have the CPI data, or the inflation rate for US, monthly basis and yearly basis for the month of November later at 9:30 p.m. And also we have the Michigan consumer sentiment around 11 p.m. So with this one, the yearly basis for the month of November, we can see here that the previous data was 6.2%, and the market consensus is around 6.8%. So this 6.8% right here, if we base on the CPI data, based on the stats for the US, the last time that they've had 6.8% was year 1990. So it's never been touched since 1990. So later, if the CPI data for yearly basis for the month of November was around at this range, or 6.8%, or maybe higher, then we can see a strong momentum for the dollar later at 9:30 p.m. So that is why our key product for today, we have the gold. So the current price of gold is around the 1778.82 per ounce. So if you can still remember, a few months ago, the US government, they released their inflation rate data. So it was higher comparing with the market forecast, and it beats the previous data. So it helped the gold to rebound sharply on the upside around the 1800 per ounce. But personal opinion, for today's range, we have to focus on the 1784.23 and 1793.21 per ounce for the key resistance, and the support around the 1769.98 and around the 1764.49. So if the inflation rate data beats the market forecast, let's say 6.8 or maybe 6.9%, then we can see a strong rebound for gold once again around this area of resistance. So we have to be cautious with this one later, especially after the release of the inflation rate. So once again, for the European session, we have to focus on the GDP data for UK. So monthly base for the month of October. Later at 5:05 p.m., we have Christine Lagarde's speech. And for the US session, we have the inflation rate at 9:30 p.m., monthly and yearly basis for the month of November. And we have to focus on the Michigan consumer sentiment later at 11 p.m. All right. Thank you everyone for joining our daily briefing for today. Stay safe and have a great day.